Last year, I crossed $100,000 in net worth, which means I'm 10% of the way to my goal of $1 million by the time I'm 40. But my investing strategy today looks a lot different than it did a year ago when I made this video or that video. I don't know which direction it's going to go. So in today's video, I'm going to be breaking down exactly where my money is going this year and what my plan to go from $100,000 to $1 million is over the next 11 years. If you're new here, welcome. My name's Josh. I am 29 years old. I live in Los Angeles and I make videos documenting my journey to financial freedom. I've been saving and investing over the last 6 years now, and I've had a goal since I started this journey of hitting $1 million by the time I'm 40. That buys me a lot of extra freedom and flexibility. I have no intentions of retiring at that point, but I want the option to take a job that pays less money, to take some time off, travel a little bit more, just have a bit more freedom with my finances and my time and my energy. So if you're into this sort of content, please go ahead and subscribe. It helps the channel out a ton, and I appreciate it greatly. Right now, my net worth is sitting just under $108,000. The biggest chunk of this is going to be sitting in the S&P 500. Then I have a large position in crypto, a good chunk of cash, and smaller positions in the international markets, in real estate, and in bonds. The breakdown is going to be on the screen on one of the sides of me, and this is not exactly how I want my portfolio to be allocated. I did a lot of thinking towards the end of the year, came up with a new breakdown for how I want my money to look at the end of 2026. So what I'm going to be rebalancing towards is going to look something more like this: 35% S&P, 20% in my savings, 20% in crypto, 10% in international markets, 10% in real estate, 5% in bonds. The S&P 500 is still my core investment for long-term growth, which is why it makes up the largest percentage of my portfolio. The 20% in cash is intentional. I want flexibility and optionality over these next couple of years. I don't know exactly what they hold for me, so I want the ability to have money for a real estate deal, have money if I decide I want to buy a house to live in, have money for going all in on a side hustle if I want some buffer room in between leaving my job and going all in, hopefully on this side hustle, my YouTube channel. So the higher percentage in cash is important to me right now. Crypto is capped at 20% currently. I have more than 20% of my portfolio in crypto, and I believe in Bitcoin and Ethereum. Those are the only two that I own. So when I'm talking about crypto, I'm just talking about Bitcoin and Ethereum. But I still don't want too much exposure to the market. It's very new compared to traditional markets and it has higher risk. So I want to get that down to 20%. I want 10% of my net worth in the international markets. I haven't had exposure in the international markets prior to this year, and that's an area that I've missed out on some really good returns over the last 2 years specifically. Real estate is something I want to grow into, so it's currently sitting around 5. I want to get it up to 10% by the end of the year. If possible, I'm really only going to invest if a good deal comes up and it makes sense for me. But over time, I'd like to get this up higher, closer to 20-30% of my portfolio. But for now, just easing into it. And then bonds at 5%, that's staying basically the same as last year. And those are just there for peace of mind. So this entire plan comes down to 3 things. First being, I need to increase my income by $10,000 every year, which I know there's going to be someone in the comments saying that that's impossible and I'm not going to be able to do that. And I'd really love it if you subscribed so that you can continue hating and see if you're right or wrong, because you might be right, but so far you've been wrong. Over the last 3-4 years, I've been able to do that, and looks like I'm going to be able to do it this year. It's going to be a little bit harder this year. It's not as clear, but I'm $5,000 off of hitting my goal. Just need to figure out how to pull together another 5,000. I think I can do that. So subscribe if you're one of those people. The next thing I need to do is I need to increase my savings rate by 1% each year. So this year I'm saving 26%, next year 27, next year 28, and so on. And the third thing is I just need to let compounding do its thing. I don't want to get too complex with my investment plan. I'm investing in index funds. The crypto is there because I made an investment when I was young and I got lucky, and the rest of it is pretty simple and straightforward. So I'm going to keep it that way and let the markets do their magic. I've got this tracker that I made for myself, or like a projection that I made for myself, that I haven't figured out a good way to share. Currently, it's too complicated, but I know a couple people have asked for it in past videos. I'm working really hard on making a really good net worth and expense tracker. I will figure out how to add this to that tracker at some point down the line. I just haven't had the time for it yet. But if you do want my net worth and expense tracker, those are linked down below in the description, and there will be new and improved versions of those coming out very soon. So if you go to the link in my description, you sign up with your email, you get access to the current net worth and expense tracker. Those are both free. The new ones that will be dropping will be a free version and a paid version. The paid version will be much more fleshed out and hopefully very helpful for you guys when it comes to tracking your finances. So with this tracker that I made, I have a conservative an average and an aggressive projection on how much my net worth will increase each month based on how much I'm investing. The conservative number is based on a 5% annual rate of return. The average number is based on a 7% rate of return, and the aggressive number is based on a 10% rate of return. So this year, I need to make $110,000. I need to save 26%. Next year, I need to make 120 and save 27%. The year after, I need to make 130 and save 28%. And so every year, there's more and more money that I need to make, more and more money that I need to save. And following the average projection, this would mean that I would hit $250,000 in net worth by the time I'm 32, $500,000 in net worth by the time I'm 35, and then I'd cross that million mark when I turn 40. If I end up following the conservative number, I would end up hitting a million around 43, I believe. And if I tracked the aggressive number, I would hit a million by the time I'm 39. Any one of those three is great, but currently at 29 with a net worth of almost $108,000, I'm well ahead of the aggressive projection for this month, but it's only been 2 years since I started doing this plan. So I don't expect to maintain the pace that my portfolio has been growing over the next 11 years. I'm assuming that some years are going to be way slower, some years might be negative, and then I'll have a couple years where things are growing really fast like they have for me the last couple years. When it comes to how I'm going to invest my money this year, I have a really specific order. So first, my 401k. On average, I'm putting $481 per month in my 401k. That's about 2/3 my contribution and 1/3 my employer's contribution. It's not the best match. I have to invest 6% to get a 3% match, but it's still free money, and I love free money. I'm always going to take advantage of an employer match. So right now, my 401k is just under $23,000. Most of this is in the S&P 500 with a small portion in bonds. Then the next place that I invest my money is in my HSA. I contribute about $367 per month, 75 of which comes from my employer. I just started this account, so it's sitting at $1,100 right now. Most of this is in cash and a small portion of it is in the S&P. Moving forward from my HSA, everything over $1,000 will be going into the S&P 500. $1,000 will be staying in cash because that's how it's set up. With my 401k and my HSA, the money comes out of my paycheck before I get the chance to touch it. So those go away automatically. And then I have about $1,500 every month on top of that I'm investing somewhere else. And the first place that money goes is my Roth IRA, which I've already maxed out for the year because I was investing a little bit more aggressively than I had planned on. This account is sitting at $27,500, and that's split about 50-50 between the S&P 500 and international funds. Next, my money goes into a taxable brokerage account. Right now, it's sitting at about $4,000, and it's all invested in the S&P 500. Over the next 3 months, I'll be investing $1,500 a month into this account. And then for the remainder of the year, that $1,500 a month will be going into my savings account from August through December. Right now, my savings is sitting at around $17,000 and it's earning 4.5% interest. I bank with SoFi, so to get that 4.5% interest, I have to have their SoFi Plus subscription. It costs $10 a month, so it's technically not 4.5%, but it's still more than the 3.3% that they have without SoFi Plus. And it makes sense given how much I have in my savings account. I'm still making money off of that. Now, with real estate, I've got about $5,000 in a real estate deal in Baltimore, and I want to get my real estate percentage up from 5% to 10%, but I'm not going to do that unless a deal comes up that makes sense for me. So if a deal comes up, I will invest in real estate. If not, real estate will remain a lower percentage of my portfolio at the end of the year than that 10% number. That's my goal. So I'm hoping that a deal comes up. If one doesn't, then I won't put money into it. And then for crypto, I've currently got about $30,000 in crypto. It makes up 28% of my portfolio, which is higher than the 20% number that I want it to be at. So I'm just not investing any more money in crypto until it comes down to 20%. So I'm letting my crypto rebalance over time and my real estate will rebalance as deals come up. So that's what I'm doing, but maybe equally important is what I'm not doing. There's a couple things that I want to highlight because I think it's important to mention. One, I'm not picking individual stocks. I don't have the time or the energy to be in the markets every day, paying attention to companies and doing my research to make an educated investment on an individual stock. I don't have the time for that, and I just don't want to do that. It's not fun for me. I'd rather buy a broad index fund and forget about it. And I'm also not trying to time the market. My first paycheck of the month, $1,500 comes out, it goes to whatever investment account it needs to go to, and it gets invested. No matter what's going on that day in the market or that month or that week, the money's getting invested when that paycheck comes. And then I'm also not rushing into real estate deals. I want to get my exposure up to 10%, but I'm only going to do that if a deal comes across my plate that makes sense. If I don't get a good deal, it stays at 5% or it's lower than 5% because I haven't invested anything more in it. Now, obviously, this plan is my plan right now as of today. It's not set in stone. I reserve the right to change my mind at any point this year for any multitude of reasons, some of which could be I lose my job. Hasn't happened to me yet so far, but it's a possibility. If I lost my job and I didn't have income coming in, I would not be able to continue investing and I'd have to pull from my savings. So that would significantly change my plan. If the market crashed too significantly, the end of the year where my plan is to save aggressively and build up my savings, I would switch that. I wouldn't save anything and I would invest aggressively instead. The other thing that could change this plan is if crypto really spikes. At that point, I might consider rebalancing and selling some of my crypto. I said 2 seconds ago I'm not going to sell, but if it spikes to a point where there's life-changing money for me, I would consider taking some profits at that point. If anything does change, I will make a video updating you guys on whatever that change is. But for now, this is the plan from now through the end of 2026, at which point I'll reevaluate and let you guys know what my plan for 2027 is. But that's all for today. Thank you for tuning in. Like I mentioned earlier, if you want my free net worth and expense tracker, those are linked down below in the description. I love you guys. Peace.